idea. So, you don't mind if I record this, my sharing?
Okay.
Okay, is it okay I off my video first in case because my eye not so good, in case I go very near?
Okay, sure.
Yeah. Okay, so this one is we are actually sharing the dividend income technique. Okay, so how do we generate dividend income? So I understood that you do the stocks and share. It will be a different style to collect dividend. Okay, because we're not collecting from one stock. So later I'll share with you how to go about doing that. Yeah.
Okay.
So next slide. I'm just a little brief intro. Nearome.com is my platform. I think 9 years already. Now this year is 9th year. I'm in the financial industry actually 20, 30 years already. Many different instruments I've actually exposed to. Okay, whether hands-on or I manage group of traders or investor network and all that. Right. So this one you can check it out. Yeah, nearome.com. Next one. So before we go into the technique itself, usually I like to share the macro view, because the market involvement and the financial outlook is going to impact on how we make our financial decision or our investment decision. Okay, it could be evolved also already. Yeah. So these are the very common one we've already been experiencing it lah. Okay, but it's going to be escalating even more. A lot of different evolutions coming upon. Whether is it AI, whether is it the different style of financial market, not the traditional style of like even just trading or investing in stocks and shares. Okay, because with all this evolution, it could impact on the appreciation value. Yeah, it could impact on the appreciation value. So we have to be very careful. So because of appreciation value impacted, that means then the next alternative is like then cash flow lor. Because it's either we hold a little bit longer to get appreciation, or we go for more regular cash flow distribution to us. Usually it's these two kind of investment purpose lah. Yeah. So okay, next. So this is the again very much on the impact of the evolutions, because we know what's happening in the market, right? Whether is it the natural disasters or the economy demand supply. So all the rising costs of food, transport, inflations, our taxes, all will continue to rise. Yeah, all will continue to rise. So if our income coming in, whether employment or investment or side gig, is not able to match the fast and high outgoing flow of cash, then we will eventually become deficit. Okay, will become deficit. So we may not be able to wait until our investment appreciate by when. We may want to have more cash flow to cover our rising cost of living, or if not, our quality of living could be very much affected. Right. So this is how the impact is going to perhaps impact on how we make financial decision really, financial goals. Yeah. So this is to be ready lah. And okay, next. Okay, this is just the further illustrates under the economic sector, there will continue to have the inflation, the potential bankruptcy they cannot sustain because rising costs, manpower costs. That's why you see a lot of unemployment coming, starting from US, Europe, and all that already. Even Asia, even Singapore, we also have a lot of sudden retrenchments and stuff. Yeah. So then with that, now we suddenly lost one source of income. So that's why we cannot rely on just one source of income. So income meaning that is regular, is repeated every month, then it's considered income. So that's why I say we got to then diversify. What else can be even passive income? Because if it's active income, we got to work towards it. But we have limited hands and legs. So then to explore then passive income that make our money work harder for us before it cannot flow out to somewhere else. Yeah. So that's why this is where, because of this evolutions, I went to look out for then what is a decent regular flow of income to supplement our active work. Okay, and then our current savings and all that, how can we let it appreciate, whether maintain, don't depreciate, don't because of inflation, actually not able to help support the outflow of expenses and all that. All right, next one.
Yeah.
Yeah, fair enough. Yeah, we're all into this lah. So that's where this one Singapore news so just the latest one. So a lot of scam also. So Mo Ting Ting don't know what happened also can gonna scam money also gone
Yeah.
not even spending that is worth. Okay, because they can even use bank name, cover up, and then the SMS come, then we don't know, we go and download, no, we go and click on link. So I don't know if Malaysia have such or not, but just beware lah. Any SMS link from claiming to
Yeah,
bank,
same.
now our banking app and all that actually very dangerous. So on our phone, anything we link, I don't know how the hackers become very smart, AI or what, and then go and step out all our money. Suddenly we become very poor. So be very careful. A lot of this also trend. Scam is going to be trend. Then the unemployment and then interest rate, mortgage rate. Even though they claim, okay, savings rate they want to reduce, but mortgage rate never reduce. Then they increase, the mortgage rate will usually increase higher, faster than the saving rate. So again, there is a gap. Because bank also want to earn. So always there's a gap. So that's why we have to really review how we do again, back to our savings and investment rate. Okay, next one. To protect actually now the key is we have to really protect our base which is whether is it our savings, and saving even doesn't mean I put it into the FD, put it into the saving account is safe, not necessary also. We have to be very careful or prudent. So certainty, right? Certainty, is it in our favor? Because there's a lot of certainty that is not in our favor. Certainty that maybe there's potential war, some more, crisis in the supply, rising cost of living, outflow is going to be more. All these, a lot of certainty, getting very certain and more and higher. But our savings, our income, if it's not certain to again supplement or buffer, we are at a loss position. Yeah. So that's why again, when it comes to making financial decision, I look at then which instrument now, traditional or we have to make it a little bit more creative, is able to provide us that certainty, but yet not at the expense of risking into scams platform. Okay, so next slide. Yeah, because certainty so that means, okay, our capital, our limited capital, how to make it work harder for us. So our CTA is a call to action mission. So our mission is we wanted to find regular cash flow, certainty of regular cash flow coming in, income, like I mentioned again, every month it will come to us, passive or active. Okay, so both, we need to increase our income now. So it's the cash flow, liquidity is king, cash flow is king. Okay, next one. Because of that, we have to be very careful how we select the investment. Okay, and also that's a traditional still makes sense, because sometimes traditional, it will be also impacted by just now all the evolutions I mentioned. Yeah. So I do a table, to compare basically the traditional style of investing in different instruments, financial instruments. Yeah. So the common ones, some people say, oh, they invest in index, ETF or whatever. Never mind. That one can come under also consider stocks, portfolio or whatever. Okay, similar kind. So whatever we invest, the instruments, we must take note. I will put it consistently the same capital amount. Okay, so with the same capital amount, what kind of instruments can give us different percentage of the cash flow coming in? Usually, I would then use it as a per annum. Okay, because a lot of time per month, regular one, the only one I see, unless we're active into trading. Trading, then you in out, we don't hold and keep so we don't hold and keep trading. Then if it's trading, if you don't automate it, then you are also actively going to trade. Okay, so that means income, because you have to be involved. So when you're involved in trading, can you do something else? So this is that. If not, then it also opportunity cost. Yeah. So then we have to take note the loss. Other than the capital potential, still have the risk to whatever we invest or trade. Right? Sure got risk, because show up and down. The price is not going to be stagnant unless fixed deposit because we pass on the risk to the bank. So we take a much lower amount. Then they also take our money, go and make their own, their own trading, and then whatever they make, they will pay us Yeah. No, they will only pay us whatever, maybe 3% now. I think Malaysia also about there per annum. Yeah. So then how much leverage? Leverage meaning that is all this platform giving us extra cash or buffer, the cheap to go and buffer our potential losses or do our trading or investment. Usually only trading, they give some leverage. Investment, depend on the platform and whether do we need to pay back. Okay, so leverage can be double-edged sword when be careful. So the method, it can be manual or auto. Then you have to go and evaluate whether your time spent is going to give you good value, then you can continue. But then you will still have other buffer extra funds, whether are you able to make it in the passive mode or still giving you that income. Because active mode, meaning that 手停口停 that means we stop trading, then we also no more that income come in already. So we got to plan B lah. Like everything we better plan B, contingency plan. Yeah. So then the last row, or the last two rows, the dividend, we're not looking at using stocks, but you're looking at using unit trust fund. So I think in Malaysia, unit trust fund probably sold by some platform also lah, some stock platform or insurer, they will sell unit trust fund, I suppose. But again, on the past conventional lah, because I also before usually when we buy unit trust fund, usually there's only two types. We either buy for the fund to appreciate, maybe India fund, China fund, technology fund. We thought like a prospect, and then we buy, it appreciate, then maybe we sell. Then we gain from the capital gain, right? Then the other method is we invest into the dividend income paying fund. So certain fund paying dividend, then we invest into that fund, then they regularly, depending how often they're going to give out their dividend, we will get the dividend income. Now, in the past years, unit trust fund prices seems to be heading down. Okay, more of it. There will be up and down. But if we were going to put out there for long, it doesn't seem to have good value. That means it's like management fees still there. There are still some costs and charges. The charges seems to be eventually higher than the fund appreciation. Okay, so if we even invest in the dividend income fund, the dividend income better be higher. The accumulated or collected dividend income better be higher than the fund depreciation, the fund price depreciation. Otherwise, we still net loss. Fair enough. We still net loss because our capital is depreciating at the expense, although they are giving us, then it won't be a net yield for our dividend rate really. Okay, although we thought that we got 5%, 8% per annum dividend, but it may not be the net return that we get if our fund price drop too low. Okay, so this is one thing to note. Then how to combat this? This is where I'm going to share the dividend. SP is a signal provider. Sorry, they call it the signal provider, providing signal on the dividend income fund. Okay, so this method is very interesting. We're going to trade, or we're going to switch, depending on how you use the term, different funds. Okay, that means unit trust funds, we will go and select which are the unit trust fund that is providing dividend at different juncture, different timing of the year, different month, different frequency, and how much are they giving out the dividend. Okay, yeah. So then our funds, our capital will not be static and placed only in one dividend income fund to only get one source of dividend. Okay, so yeah, next slide. So that means I give a very easy analogy. Now we got fund A, fund B, fund C, 3 funds. Okay, so fund A is like, okay, now Chinese New Year coming, we will want to visit all 3 fund houses at different timing when they are giving out the dividend angpao, dividend income angpao. Okay, so this is how we do. We have only an amount of capital, so we know that we would then go and visit fund A. Let's say that today they are going to give out dividend income. Before they give out, we have to go and participate. We have to go to their house ready to say, hello, we're here, waiting for your angpao. Right? So then on the specific timing and date which we will know, they will give out the dividend angpao to whoever visited them. So after they gave out the dividend angpao, we sit a while, we will also be alerted when is fund house B going to give out their dividend angpao on the same month. Okay, so today we get a dividend angpao, then when is next? So when we know that, okay, next week their Fund B is going to give out dividend ang pao, we will get prepared and visit Fund B. Okay, so after Fund B give ang pao, we say thank you, we sit a while, we see when is Fund C giving out dividend ang pao. Then we will go and visit Fund C. You get coming from? So these three visiting, visiting, we call it in this unit trust fund, the term used is called switching. We switch from Fund A to Fund B to Fund C. Okay, so when we switch to get the dividend income, we will do this switch 3 times per month. So we will visit 3 different fund houses that is giving dividend income every month. Every month, we will repeat this procedure for 12 months. Okay, so far so good? Yeah.
Good.
So this is different from we investing in stocks, or we just invest in any dividend income fund where we actually park there and then we leave it for months or years, and then we just collect the dividend. No, because this way will not optimize the amount of dividend income to us. It will not be a dividend income, because dividend income is that we want it every month. Income to supplement, okay, to supplement our cash flow. So we as regular as better. Okay, so this is our objective. In order for us to optimize, we have to make sure we optimize 1 month with a given capital. How many fund houses can we visit? So we optimize it. The best is that we can visit up to 3 because there's processing time. By the time we visit and then they process, they give us the ang pao. After that, we have to prepare to leave. Then we go and visit another fund house. Okay, yeah. So next slide. So this is the technique, manual technique. We will have to hands-on to go and switch. So before we go and switch, we have to then identify, okay, to ensure that the platform have enough unit trust fund, dividend paying unit trust fund. Yeah. So if it has, the more it has, the more we're able to select the best. Either the best in their dividend, and then the price is still quite decent, it's also quite on the top list funds kind. Okay, then it makes sense that the funds won't drop too much, okay, and the fund house are also reputable. Okay, yeah, so then it won't disrupt our plan to visit fund houses every month. Okay, so there will be cost or not when we switch fund. That means when we visit each fund house, will we be charged any fee? Okay, so take note of that. And how many times can we switch every month? Unlimited, or there's a limit to only up to how many? 5, 3, or 1 switch? Okay, yeah, all this must be ready before we can apply the technique. Okay, yeah. Then at the same time, the price, it will be big to big price, no spread in between. Okay, if you know what is spread, so when we buy and sell our currency from say Sing dollar to ringgit, for example, there's always a difference in price. That is the spread where the money changer will earn. Okay, so when we switch from unit trust fund to unit trust fund, is there any fee, spread fee in between? Okay, because all these are costs that could affect our ROI, the return on that dividend income. So we got to take note of whether all these costs are available. Okay. Then after which, any freebies, any leverage, just now I mentioned. So by the platform that's going to give us, because any cash extra or leverage give us, it helps us to buffer any potential charges or potential losses in price. Okay, so that is key. So we can check for that. Then are we then able to schedule? That means we have to go and read all the prospectus, the fund fact sheets and all that to see whether when each fund is giving out the dividend, the exit dividend rate, okay, the distribution rate, how many percent, yeah, and what is their timing? Are we able to time like within 1 month? We're able to quickly collect from fund house A, then after which still in time to go to fund house B. Then after paying up from fund house B, are we still in time to go and collect from fund house B? Yeah. The fourth one, I think, could be challenging. Okay. If you can find the fourth, every week also can switch one, best, lucky, even better. Okay. But if not, try at least 3 because 3, if let's say average one fund house give out 1%. Okay, it can vary, every month could be different. But we average out, let's say for simple illustration, 1%. That means our target cash dividend to collect is 3%. And because it's repeated every month for the next 12 months, we are expecting we're going to do switches about 36 times to get about 36% by end of the year. Okay. But the best part is that we don't wait until year end, then we collect our 36%. Every month, we expect to already receive credit to our bank the cash 3%. Okay, understood so far? Yeah. Okay,
Yes.
great. So this is manually. If you want to do it yourself, you have to schedule it every month. Excel table or whatever. Quite tedious, a full-time job. This one become active if you are doing it manually. Yeah. So now is that we're sharing this is basically the technique lah. People can know it seems like wow simple but it's not easy. Okay, yeah. So then we realized that we tied up with a software developer, which also the agency group, the digitalized method, which is like quite a automate method on all the tedious strenuous part. Okay, the next slide. That means having to schedule every month quite daunting. Beginning of before we start, now we have to really go and read out hundreds of unit trust fund to ensure that out of 100, how many can we apply? Okay, to go and participate in their dividend income distribution exercise. And can we tie in every month at least? We don't miss out visiting at least 3 fund houses. Unless visit 2 fund houses already can give us 3%, let's say. Yeah. So at least either get a 3% or we visit 3 fund houses to accumulate it to 3% per month. That is our target to go for the dividend income. Okay. I think 3% per month is very decent. Cannot find anywhere. It's not even 3% per year. Yeah. So okay. So we make it automated by digitalize the tough part. That means initially all the tough part, now we read all the prospectus, but we will still regularly review. Because sometimes fund houses, yes, they will declare it per year. They declare per year, some unlikely they will change because it's mandated already. They will have to fulfill it, the percentage or when they're going to give out distribution. Unless they never indicate the active distribution date, we may not want to participate that one. Or discretionary, then it's a bit risky. We don't know discretionary, don't know when. Okay? So that's why these are the terms we need to go and check out. And then we will write it into the program so that they can alert us. That's what it's called signal. It will signal the agent, and the agent will actually inform all the client investor, like, okay, Zelda, tomorrow we're going to, you will receive the email notification by the insurer platform. Okay, we participated in this insurer because they gave us extra bonus, 50%. Okay, 50% bonus, match our capital. So it increased our investment capital for dividend distribution. And also there is enough dividend income paying fund for us to choose from. Okay, they have almost about 80, but we don't need to use all the 80 funds. Okay, as long as enable us to switch 36 times to different fund houses, but there's many for us to choose, which is good. Okay, so this is crucial, and also is big to big price, and they are not charging us any switching fee. Okay, so that's why we choose this platform. Yeah, and then of course insurer is regulated by MAS, right? So with that, our funds capital are kept secured, I would say secured there for us to exercise this dividend income technique. Okay, so now this is not a company-wide approach of doing it. Okay, that's why I say that we are under the more creative group. So the creative group, if we don't just park there, okay, we want to optimize it. So to optimize it, we will see what the facilities available for us, and we optimize it to such that our capital go into this unit trust plan. Every month we also switch and get out dividend income. Okay, so this is a unique part of this agency group, right? So then up to here, so far so good.
Okay. Can.
Okay, next slide. Okay, then I go to the next slide. So I will choose the automation method. I'm in it. Okay, seriously, I need it. certain amount. Since last year, I've already, before last year, actually, I already involved in a manual method by another platform, insurer platform. But manual method, they only give about max about 10% per annum. Wow, after I know this automation method and they can give up to 30 over percent, I was like, wow, okay, this is even better. This is even better. Okay. Yeah, so I immediately participated lah. And okay, so this is what I mentioned. This platform that I participated, this group of a programmer, okay, they digitalize it, and they go around to scout for which insurer platform or which unit trust platform able to give best value for us as a leverage, as a leverage. So that's why only this insurer platform, okay, which is giving out that 50% to our first capital amount invested. Okay, and there's free unlimited switches, and they can then able to add and enough unit trust funds, and so that we can actually select which are the funds are already pre-selected, although we will review it still every month. So that become very effortless because we still have some work to do, but not so active. Means our work is only because regulated platform. We will receive email notification to approve the switch from one fund to another fund. That means the agent would have activate for us, send the request that we wanted to switch from fund A to fund B. Okay, and then we have to log in with our this ID and OTP to the phone, log in to approve. Indeed, that yes, we agree, we wanted, we approve the request to switch. Okay, so once the platform receive request to switch, we will all receive acknowledgement, email acknowledgement messages, that you have already sent approval to switch. So once approval to switch, they will process. They will process to switch from previous fund A to the fund B. Okay, so there's processing time. So about a couple of weeks, right? So after the we switch to the fund house B, in time for that dividend distribution date. After the dividend distribution date, we will also be notified by the platform, and the cash amount, the dividend cash, will be credited to our bank account. So immediately after the switch, they will arrange and credit it to our bank account. So it's quite within the couple of weeks, we will receive our dividend payout already. Okay, dividend payout already. So that is why all this will be documented, and we can log into our account to see all the flow, the trail, the funds that we switch to in and out, how much dividend did we get, how much price we buy in, what is our value, existing value and things like that. Everything is very transparent. Okay, so that's why this is pretty awesome. Yeah. Next slide. Okay, so this plan, this insurer plan, is a regular premium paying unit link plan. Okay, supposed to pay the premium for 13 years. This is how the plan is structured. Okay, so any agent would sell this plan, their client policy holder will fall into this standard plan. Yeah, but because we apply this dividend income planning every month, for every one of us, the investors, policy holder, even though it's a 13-year premium paying, we can probably minimum set aside if we are tight of budget, we want to do planning on our cash outlay, we can minimum still set aside at least 20,000 SGD. Why 20,000 SGD? Later I'll show you the table to illustrate. This is a yearly premium. Then they gave us 50% extra, and the yearly premium is minimum 10,000 SGD. Then they also fit the criteria to give that 50%. So that's why we came up with and which is good because with that lump sum of at least 10,000 SGD per year, we were able to straight away apply the 3% every month on that 10,000. But because they gave us 50% more, so actually we have 15,000 for the first year to go for dividend distribution of 3% every month. Okay, so now we go to the table. I will show you easier the figures. So Oh, this is a traditional, so I'm not too sure if you're familiar. Some people, don't quite like the unit trust of the traditional method to just park there for price appreciation because usually we suffer loss. So this one is, I prepared this table in case we need to explain this. The way we do it is different from investing just in specific unit trust fund. Okay.